investing. It's now time to discuss Home Depot, which has earnings tomorrow morning. Investors will be watching for signs of how much pressure is still coming from the sluggish housing market, weaker big-ticket DIY demand, and margin compression. So Paul J. McCarthy, president of Crisco Capital, is joining us now to discuss what he'll be watching, of course, going into the print. And Paul, thank you so much for joining us on this Monday. Home Depot is an item of watch tomorrow morning, but what do you see as really one of the most important metrics to keep on investors' radars when, of course, we get those numbers?
Yeah, I mean, I think everyone knows that the housing market's been, it's been challenging. The second quarter is typically Home Depot's strongest quarter, so I'd want to really sort of see that their margin compression, they've been suffering from weaker margins over the last 4 quarters. So I think the one thing that stands out to me is whether they're able to recapture some of that margin. Do they have any pricing power? Are we still kind of in the doldrums with this sector or not?
You know, when we look at this particular company, Paul, I know it's pretty split amongst, just the everyday household consumer and then the more professional contractor-like consumer. On the professional side, which I know is important, how interest rate sensitive is that business? Does it need the housing market to unlock a little bit? Or is there just more repairs and stuff going on kind of constantly, projects constantly going on?
Yeah, it's a good question, because that sector, it's between do-it-yourself and the larger companies, let's call public companies, right? So they're trying to capture their pro segment, larger projects, but these are, companies that don't have low cost of financing. They don't tap capital markets. So I do think that interest rates do have a factor for them as well in terms of the cost of their business. I don't see them as I think a lot of consumers have really low interest rates on their mortgage that keeps them, in their house, because housing turnover really helps a company like Home Depot. But the professional side, I think maybe is more attuned toward the growth of the economy. And I think that, that is sort of still in a good spot, but I think that it's still a little bit challenged here with the overall housing market. I think there is a knock-on effect with the consumers in terms of, the larger projects or whatnot. So maybe houses aren't flipping, but there are people who are still making good income, and maybe they want to buy a new house that's a newly built or highly renovated. So not completely devoid, but not as tied to it as I think the low interest rates from what we saw during COVID, which I think is hurting turnover right now.
Okay, so then how important have acquisitions like SRS Distribution and GMS been in helping offset some of the weakness that we've seen in, say, the more traditional DIY spend?
Yeah, so the last couple of years, they've bought 3 companies. They spent around $23 billion in acquisitions. And, they're basically trying to diversify away from the do-it-yourself, smaller ticket kind of projects and going for, a larger ticket type of a customer. And that gives them scalability. And I think that that's what they're really going for, aside from diversification, is being able to get, let's say, better costs that they can pass on and get, better market share. So they're right now still going through that integration, though. So I'd say that, on the call tomorrow, we'd want to hear how they were integrating all these companies. I'm sure it's not an easy integration, but that's something that I think down the road will be a good avenue of growth, because I do think in the next year or 2, things will probably start to pick up. And now over the last couple of years that they've been repositioning to capture a newer part of the market for them, that'll be a good growth avenue for them once that really starts to take place. But for right now, we're still waiting and seeing to see what happens.
Paul, talk to us a little bit about how you're assessing the stock price, maybe in the technical picture as well. It's been a rough go the last several years, kind of flat, let's call it over 3, but it's made a nice move going back to the end of May. What are you assessing on the technical landscape?
Yeah, I think that, I really look at the December 21 as an orthodox high. If you look at Elliott Wave, I think the high that we saw at the end of 24 was just a corrective bounce. And this is probably the last leg down. of this multi-year correction. So I think that will probably get the stock below, the 266 area, and that's strictly just a technical, aspect of it. But I think if the stock does move down into that area, that will look like a nice completed correction to me. I think it probably takes several months for it to happen. I don't think it happens tomorrow. But even since the 24 high up around 430-ish, we've had a series of lower highs. So, and we haven't broken that downtrend over the last year and a half or so. So I think for now, I think it's safe to assume that, we'll probably work a bit lower, and it's just a matter of time before there's some kind of catalyst in the residential markets. Maybe it's related to oil prices normalizing, interest rates coming down on the long end. Maybe this is like a 2027 story. But I think it's going to still be a pretty choppy trade until we see this last leg really sort of like, end this downturn. So for right now, I'm kind of in a neutral stance. I'm watching, it's a solid company, pays its dividend at 2 3/4. It's not cheap, it's not expensive. So I just think it has to work through, this slog that we're seeing in the residential markets and maybe with high energy prices before we get that catalyst.
Yeah, and it will definitely be a report of note because I do feel like it has broader implications on so many other areas of the economy. I tend to think of it as a great barometer, but really important discussion today. And we'll be following those numbers as they release tomorrow, but really appreciate it. Paul McCarthy, president of Crisco Capital.